Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going to go over some important piece of information. We're going to go over how Robinhood actually makes its money, and some of the information that I got was really interesting, and I wanted to use that in the video to put that in reference towards this market crash and this market recovery, and then use some articles as a reference. Use robintrack.net to give you guys an idea of using Robintrack, how you can use it, and give an idea how people's overall investor sentiment is going towards it. And then we're also going to look at some articles involving CNBC and what they think about Robinhood traders cashing in on the market comeback that supposedly billionaire investors missed. So we're going to go over all that information, guys. A quick intro, those of you that don't know me and what I do. I'm a dividend investor. That's what I primarily focus on, is old, boring blue chip dividend companies. I track my dividend income on a monthly and annual basis, as well as my portfolio value. And those of you that don't know, I use M1 Finance. This is the brokerage that I use. I am up pretty well on all of my stocks. And those of you that are interested in using M1 Finance, go ahead and use this link down in the description. I've had 16 people successfully use my referral link so far. This link is in the description. And speaking of the description, there are multiple things in there, not just this M1 Finance link. So go ahead and check that out. There are multiple things that you can look at in the description that might be able to help you that you might be interested in. But usually we focus on M1 Finance and its platform and what's going on there. But today we're going to switch gears a little bit and we're going to focus on something with Robinhood. So I came across this article, specifically these two articles, and it was this one that really caught my eye, and I just decided that I wanted to make a video about this. So the first one is Robinhood traders cash in on the market comeback that billionaire investors missed. Retail investors capitalized on the market comeback, unlike the billionaire hedge fund managers who said stocks would retest their lows. Millionaire favored stock trading app Robinhood saw new investors piling into stay-at-home stocks and those most beaten down by the economic shutdown like airlines, casinos, and hotels. Now, if we go down further, now I want to point out something here. This is a CNBC article. This is not some no-name news article, but it's really interesting when you read past the headlines, some of the information that they gathered. One 26-year-old Robinhood trader made $1,500 in less than 24 hours betting on a beaten-down airline stock. While many so-called experts on Wall Street warned about buying into an overvalued stock market that was bound to tumble again amid the coronavirus pandemic. Last Thursday, however you say his name, Laquan, I guess, purchased a call option for American Airlines that made him $200 on the millennial-favored stock trading app. After seeing reports that the airlines was increasing domestic flying for the summer travel, Godbolt bought another call option minute before the close. When the market opened higher last Friday after a surprisingly positive jobs report, Godbolt raked in the profits. Now, one thing I'd like to point out here that is extremely obvious, this is a ridiculous article to compare someone that is trading $500, $1,000 to billionaire investors. The goals, the regulations, the strategies are completely different. And now let's just go ahead and compare something here. Like Warren Buffett, for example, somebody that owns millions and millions of Apple shares. He's a billionaire business owner that has invested in the markets throughout this recession. And look at Apple stock. That is his number one holding. You're talking about somebody that has made billions, tens of billions of dollars just in this recession alone. So to compare somebody on Robinhood that makes $500 overnight on, let's be honest, a gamble, not even over a smart decision, I'm really surprised CNBC would ever even post an article like this. But now that we see that Robinhood traders are taking advantage of this millionaire market, the question is asked now, how does Robinhood make its money? So you see this title here, this was posted by MarketWatch. Is Robinhood making money off of those day trading millennials? Well, yes, that's kind of the point. So one thing that a lot of people know how Robinhood makes its money, they don't have any commissions for selling stocks, selling options, selling cryptocurrencies. There's so many things that Robinhood offers that other people don't. So when it comes to Robinhood, one of the only things that people know about them making money, one of the only things that they charge, this is an optional service. They can charge $5 a month to where you can get professional research. They give you Morningstar reports. They give you more analyst opinions. They give you all different types of information that might be helpful for you trying to decide your information about picking a stock. Now, these reports cover up to 1,700 stocks, primarily focusing on larger multi-billion-dollar corporations, but it shows some information here about Robinhood Morningstar works and overall if it's a good part of your service. Now, it gives you up to $5,000 in instant deposit. So basically, when you click deposit into your portfolio, $5,000, up to $5,000 will be available immediately. You don't have to wait hours or days or even a week to get your money, you can deposit that money and get an instant deposit and then buy a stock within seconds of that deposit. And one thing it doesn't mention here, it talked about the $5,000 for every other gold user. If you actually have a larger portfolio, it even goes higher than that. So if you have 10,000, it will match it up to 10,000. 25, it will match it up to 25. And then if you have a portfolio that's over 50,000, you can deposit up to 50 grand and it will credit you that instantly. So that is pretty cool. I do like that feature. And then the next thing is level 2 marketing data. So this is a little bit interesting because level 2 marketing data, in my opinion, I don't really find it very useful and very helpful, but it does give you an idea about how this relates to the bid versus ask on the spread. So this is interesting because this is what we're about to cover in this article, talking about market makers and the spread between stocks. But if that's something you're interested in using level 2 marketing data, it does offer that as well. And then last but not least, one thing that I think most investors in most scenarios should stay away from, I think investing with margin can be very successful and depending on the scenario can be an incredibly smart, intelligent decision. But investing with margin is something that Robinhood offers included in that $5 a month. So how they calculate it is the first $1,000 is included in your $5 fee, and then after that they charge you a flat 5% margin rate. So overall with Robinhood, I think the $5 fee for all of these services overall, just generally speaking, between all four of these categories is pretty nice, is pretty cool if you're interested in using Robinhood over M1 Finance. But the question is, how does Robinhood make money outside of this $5 a month? Because they can't just survive and grow their platform and do all these different services on only $5 a month per some of their users. As the twin black swans of the coronavirus pandemic and the historic oil price collapse rocked financial markets early in 2020, opportunities emerged. While there are plenty of evidence that a handful of millennials are day trading and in some cases losing a lot of money with sad and shocking outcomes, their numbers and any impact they may be having on the market is less certain. What's more, for anyone who spent a career observing and helping fine-tune the infrastructure behind financial market trading, some of the discussion about what's actually going on isn't informed or helpful, including to one analyst. There's a narrative out there that somehow Robinhood was doing something nefarious to make money off their clients in a way that was illegal or unethical or outside of the norm. So this is what's interesting here. Robin Track, we're going to look at this. Now here's what we can do. We can go ahead and click expand here and then click accept. And we are going to go to the year chart and look at the volume. So if you see here, you see the volume, these little bars here talking about, this is the S&P 500 by the way, talking about the volume at how often the S&P is traded. You can see it sits around like, you see 50 million, 70 million, 50, 60, 50. So overall the average is about 50 or 60 million a day. And then once the pandemic started, you can see that the volume is significantly higher than it was just 6 months ago. You can see 300 million in a day, 327 million, 347 million. That one day, the actual peak, it was almost 400 million times it was traded in one day. That is incredibly high. So to give you guys a quick idea on what the spread is on a stock and how Robinhood is profiting off of this, it's talking about how Robinhood might be using an illegal, unethical, or outside of the norm way to gather funds. Well, this is not unethical, and this is what is called being a market maker. So many other brokerages and so many other large banks and investment firms and stuff like this use this service. So let's say, for example, the stock is $316.75. So we're going to remember that price right now. Okay, so I want to give this example. I want to write it down because the price is changing, but $316.75 is what the stock is trading at. So an ask is what someone is trying to sell it at. That is the closest price that someone is trying to sell their stock at. And it's usually going to be a couple cents or a penny or two higher than that of what the stock is trading at. So if the stock is at $316.75, the ask might be somewhere around $316.80. So like 5 cents higher than that of what the stock's trading at. Now on the flip side, the bid is what someone's trying to buy it at. Someone is trying to buy it for cheaper than what it's worth because they're trying to get the best deal possible. They might be trying to bid at the stock 5 cents cheaper, $316.70. So when the stock moves up or down, they're going to try to meet in the middle somewhere and try to get a price that is closest to this middle ground. Now the in-between price. Let's say one stock was sold that this asked, they ended up going down to 75 cents. They went down 5 cents, and this person went up 5 cents. They met in the middle. Now the difference between these two, this is what's known as the spread, the 10-cent gap that both of these two investors lost, that would go to Robinhood, for example. Now usually it wouldn't be as big as 10 cents. Usually it's even a fraction of a cent, or it's just 1 or 2 pennies. But when this is done thousands and thousands, or even millions of times in a day, you can see how this really starts to add up. So Robinhood is just like every other brokerage out there. It is not that they're taking advantage of millennials. Millennials are just trying to make a quick buck and day trade and do things stupidly and are making bad decisions while buying stocks that they know nothing about, like Hurt stock, and then trying to make a profit off it. But meanwhile, those market makers like Robinhood who have those firms are making profits regardless, especially when the volume spikes up and trades are happening at a rapid pace. And you can see, which is what we're about to go through with Robin Track, 105,000 people own this S&P 500 stock alone. The chatter about how Robinhood and other brokerages make money reveals a deep misunderstanding about how Robinhood trading actually happens. Most investors think that when they try to sell a stock or an ETF, the brokerage platform they use will find another interested investor to buy it, and vice versa. In fact, all brokerages work with companies called market makers. I wanted to point that out. Just like I said, all brokerages work with companies called market makers. The term market maker and the various metaphors often used to describe them and their role sound very personable, almost bespoke. In reality, such firms operate massive algorithm-based programs that allow them to see huge swath of financial markets at once. Who wants to buy and at what price, who wants to sell and the price that they want to get, and crucially, whether the market maker can make a few basis points on the difference. So what we're talking about is an extraordinarily thin margins business. It happens millions of times per second. And Robinhood is one of the key aspects of this. They are included in that millions of times per second. So this is how Robinhood makes a huge part of their money. So getting as many people sign up through the app, regardless of whether or not they sign up for that $5 fee, they will still make money off of them using the market makers. And like I said, it is not unethical. It is not illegal. It is an extraordinarily thin margins business, just like that person said. Okay, one thing I wanted to point out here, Robin Track. This is something that I found out that I stumbled on recently, and it gives you a good idea about how many people are buying more or less of a stock and for what reason, based off the price, based off the market, and overall you can see the massive trend between a lot of these main top stocks and how heavily they're being bought now. So what is Robin Track? Robin Track keeps track of how many Robinhood users hold a particular stock over time. It generates charts showing the relationship between price and popularity and compiles some lists using the data. What can it do? One of the most useful things that it can do with the data that this site provides is to figure out how people are reacting to moves in the market. Depending on if people are buying the dip, getting on board during a pump because they think it's going to go higher, or taking profits. This data lets you observe each of those different situations and plan your own trading accordingly. Now, first of all, I'd like to start by saying I would not base a purchasing decision based off of Robin Track, but I'm just going to scroll through the top 25 stocks here and just give you an idea about how people have been treating the market. So you can see this is Facebook when it had a huge dip down from the earnings report, and then for years after a huge spike up from the earnings report, it just gradually trended down, and then now you see the huge massive wave of Robinhood users piling into the stock. About the beginning of the year, or the end of last year I should say, there was about 125,000 people that owned it. Now we have almost 250,000 people that own Facebook stock. At the peak here just a couple days ago, it was 235,000. You can see this trend with many other stocks. Royal Caribbean. Royal Caribbean was a stock that many people did not really focus on Robinhood until this recession hit. You can see for years the stock was very thinly traded and it floated around 1,000 people owning it until now we have 200,000 people owning it. If you see Uber stock, by the way, did just buy Postmates in a stock deal. We'll cover that in the next video. I wanted to mention that. But Uber, you can see the massive spike up once the stock market hit its March lows, and it's just been a gradual uptrend ever since. And I'm just going to start scrolling through these. We have NIO, we have CGC, we have Hexo stock, we have Amazon, we have Snap, we have Fit, we have United Airlines, we have Boeing, we have Tesla, we have Bank of America, we have Norwegian Cruise Line Holdings, we have Plug Power, Aurora Cannabis, GoPro, Carnival Cruise Lines, Apple stock, Microsoft, Delta Airlines, Disney, American Airlines, General Electric, and then the number one, of course, being Ford stock. Now, I think a lot of people own Ford stock strictly because many people get it for free when they sign up using the app. So you do have that right there, but I think a lot of people are buying it just more as a speculation because the price is so low they can buy multiple shares. Where an Apple stock, for example, that's $300 and something dollars, they might not have fractional shares, so they might not be able to afford one share of Apple stock, or it might take up a massive part of their portfolio, not being able to afford $370 for one share. But overall, if we just look at the SPY or the S&P 500 through Robinhood, you can see the massive spike up in the amount of people buying into the market in general. Now, I know a lot of people are buying a lot of speculative plays and a lot of juiced up tech stocks, but overall, it's good to see that people are investing regardless of what they are investing in. But to give an example, the S&P 500 had about 40,000 people, 45,000-ish at the end of the year last year, and now we have over 105,000 people invested in the SPY just through Robinhood. Now, this is not counting anybody using M1 Finance, using any other brokerage like Fidelity or TD Ameritrade or anything like that, but Robinhood is by far the #1 leader for Gen Z and millennials, so they have over 105,000 people investing in the SPY now, so that is fantastic, and I am not going to be against that. But overall, guys, thank you guys for watching all the way to the end. Now, while Robinhood doesn't voice very much that they do make money from market makers, neither does all the other brokerage out there. This is not anything new, this is not anything unique, and it's not anything fraudulent with Robinhood whatsoever. I think Robinhood just doesn't voice this very much because they don't charge any other fees through any other services through trading stocks, trading options, trading cryptocurrencies. I think that Robinhood is overall a very good platform. While I am using M1 Finance as my main platform, I am not a Robinhood hater. I think that their platform is great. And I love that just in general, they're overall getting people interested in investing and appealing to the younger generation so they will invest, hopefully, for decades and decades to come. But regardless of what brokerage you use, I don't think Robinhood is making their money in any fraudulent way, and that goes for M1 Finance as well. I'm sure M1 Finance also gets money from market makers, if I were to guess. I assume pretty much every brokerage does, but overall, guys, thank you guys for watching all the way to the end of the video. I'll give you a quick update on my portfolio. So the market is up quite substantially today. It is pre-market. We are about to open up the market in a couple of minutes. But before we open up about another 1.5% in the green in about 10 minutes, we are up 13.24% in the market in total. And you see in a money-weighted return, instead of a time-weighted return, we are up 18.8%. $353.76 coming from total gains, $329.82 coming from market gain, and then $23.94 coming from earned dividends. And you can see my best returners right here is Discover Financial, Whirlpool, Apple. We're up quite substantially on a lot of these stocks, and we're also down on, 5 stocks now. We're down on 5 of the 31, and we're up on 26 of the 31. Starbucks, Store Capital, WP Carey, Southern Company, and Verizon are a few that we are down on. But overall, guys, the portfolio is doing very nice. And if we sort here by dividends, we did just receive a couple dividends to start July before we started this weekend. Coca-Cola and Kimberly-Clark, we did receive 2 small dividends from. And then at the end of the month, like I do every single month, I will be adding those numbers and then tracking my annual dividend income, my monthly dividend income, and my portfolio value and all. But overall, guys, thank you guys for watching all the way to the end. If you did, if you're interested in starting with M1 Finance, once again, go ahead and go in the link of the description and use this link right here, and you can get started using M1 Finance and get started using your own dividend portfolio, and you can get $10 just for signing up. And like I said, there's lots of other links and information in that description as well, so go ahead and check that out. But yeah, guys, if you enjoyed this video, if you have any questions for me, go ahead and leave comments in the comment section down below. This channel is performing very nice as well as my portfolio, and I'm so happy with the progress that we're making in the channel. But overall, guys, if you have any questions about any of the stocks that I own, any questions about Robinhood, Robin Track, or any information about the market, go ahead and leave that down below. Thank you guys so much for watching, and I'll see you next time.